Morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Can I get a screen and audio check in YouTube and the Bookmap Discord Trader Lab community? Thanks, Marty. And how we doing in YouTube this morning? Good morning and welcome to the Traders Lab. This stream is about integrating Bookmap order flow tools with auction market theory using the volume profiles of chassis and the intraday developing time frame. It's based on structured trades that are available to everyone at no cost in the Bookmap Discord Trader Lab community. The Trader Lab's a community of like-minded traders who come together to leverage their collective experience. It is a substantial community of serious traders. It's about the business of trading, understanding how the market works, why it does what it does, how at times we get in alignment with it with structured, vetted trades. What does vetting mean? It means only interacting in a random environment with an edge. And what is an edge? That means over a large random distribution of outcomes that you have a statistical probability of extracting dollars, if you will, from the other participants. And even though the outcome of each trade is random, and there's a random distribution of outcomes, just like the casinos, or if you will, gaming theory, if you can actually execute and do the work so you know where your trade and your edge shows up, you have the opportunity to create a sustainable business. That's the objective of the Trader Lab. That's why I created it, and that's why it's here for you, and there is no cost for it. Let's take care of business. Let's look at today. Today we were quite active in Trader Lab, and of course, like every day in the market, it's always random. So the business of trading is not being right. It is not predicting. It is executing your plan. And that is very hard for us. So why is it so hard? Because we're wired not to run into the burning building, but to run from it. And in this business, we actually have to step in front of the train or risk, and we're wired not to. So no matter what plan you develop, whether it even has an edge or not, you're still going to be very challenged, executed. I would suspect if you actually develop an edge, and even though you're still going to be challenged psychologically, you can, if you do the work, and of course this isn't for everyone, you can develop the ability to actually execute. And how can you develop the ability? Knowing where your trades show up, knowing that you have a statistical edge. And instead of being emotionally driven only by your fear, your greed, your FOMO, if you have a tangible statistic, might that help you gain control over your fear? And yes, we are all fearful. So let's put aside the nonsense and let's get real. We are battling not only the other participants, we are battling mostly ourselves. And that's why the Trader Lab exists, to help you understand the business and also to understand yourself. General disclosure, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Remember, please, this is not a trade calling room. This is for educational purposes only. It's based on structured trades that I do share in the Trader Lab, but they are actually ideas for you to research and reverse engineer. The other thing about trading is not mechanical. I know we all want plug and play. It's so nice. Wouldn't it be nice? Wouldn't it also be kind of a fantasy to think that you could actually do it and that you would create sustainability? That is the grand illusion, my friends. There is no predictability. There is only randomness. Trader Lab is about understanding this business and understanding that we have to solve for randomness and not try to solve for what we need. We need certainty, we need predictability. But what happens if you're in a business where it doesn't exist? Maybe you should solve for randomness, unpredictability, and the best you have in this business is maybe. Maybe it'll go up, maybe it'll go down, maybe it'll do whatever. And maybe the only time to interact is when you have a statistical edge that favors you. Maybe that makes sense, or doesn't it? Anyway, you're all invited to the Trader Lab. Now, as they say, there's more. Really? What can that be? Well, first of all, I do need to tell you about this. This is for the month of August. You can earn 3 months of Global Plus. That's the bells and whistles, the full Bookmap. Hold on one second. I have to look at something else here. Okay, I'm sorry. I have to check other computers here. It's the full Bookmap suite in the sense of all the Global Plus bells and whistles. You can go to bookmap.com if you want to see what's incorporated in this. It's got a lot of tools. All you have to do, and you don't even have to register with this, is screenshot your trades. A little annotation, a little circle, a little arrow, a little salt, a little pepper, and just share it up on X, Instagram, or LinkedIn, and just use the hashtag free blue jacket. And then you are actually have submitted your ticket to potentially win over $600 in subscription value. And you have all month to do it. Why don't you start today? And if you're not a Bookmap subscriber, you can download a free digital version of Bookmap, watch a couple of the YouTube videos and the education on what you're looking at, and you can start to put together some ideas and submit them, and submit as many as you want. Order flow, in my opinion, is really the missing link for most retail traders. They don't understand order flow. They don't understand the edge it might give them. And they are mostly doing what most other retail traders do. Remember, this is a business of edge. So when I talk about vetting, and I'm talking about probabilities, which I do here in the stream, what is it all about? It's getting a probabilistic edge over your competition. And yes, they get paid, of course. The casinos pay the gamblers. But I noticed that the casinos do pretty well. They can afford to give you the cocktails and the ticket to the buffet and still make a profit. Maybe that's something you should be thinking about. It's certainly something I never thought about until I had a number of years in the business. And then it was always, why do I keep waking up in the same place, not getting the results I want, in spite of working hard? What I was doing is I was looking for confirmation, certainty. And why did I decide to do that? Because I'm wired for it, not because it has anything to do with the business. I made decisions in my early development. And of course, when I started in 1980, there really weren't off-floor traders. So it's a little different for me than it would be for you. But you have a different problem. Your problem is the environment is polluted with influencers, and the only thing you need this and that. I want you to know. And when I started in the business, it was the same, except there was no internet, there was no PCs, and we didn't have the term influencer. We had books, and if you wanted to really throw some money away, go to a seminar. And that's where I kind of invested some dollars, and I definitely got to sleep in a strange place in a hotel, and I ate some crummy food, and I flew to different cities, and I came back with nada. So how's that working for you in the new way of collecting information? If you keep waking up a Trader Groundhog Day, welcome to trading. We've all done it. And everybody in Trader Lab has done the same. And the thing about it is, at some point, the light bulb might go off for you, and you'll go, why am I not getting the results I want? If you don't know why, come to Trader Lab. Maybe you'll gain some insight, and maybe it'll help you on your journey. This is an intermediate time frame chart. By the way, if you have questions, please post them. I can't see them at the moment. There is a little bit of a delay in YouTube, but throw them in the hopper. If I can't get to your question, there's a link in the bottom of YouTube. You can visit the Bookmap Discord Trader Lab community. There's no cost. You won't be spammed, solicited, or otherwise abused. Now, I've been talking about this chart, and if you guys remember, last week, this was Thursday, new all-time high, Acapulco cliff dive, gap down, pick stops under this outside edge, close down here, it's the end of the world, then gap, and then we had talked about, and if you followed the streams, there was this was on auction, so that's an area that is open, and now, day before yesterday, we fill it. Now, we have a target above that we didn't get, so we filled the gap, okay? Day before yesterday. 74.50 was the target and this day's high. And then there. And then there's a little bit more to this. So yesterday we opened higher, tickle the previous day's high, and this was my target for longs yesterday. So that didn't turn out so good. And I mean, it was okay, except got that target, didn't get that one. Life in the fast lane. What are you going to do? Then we sell off. Now, that sets up the possibility, of course, of going lower naturally. So what is our retail price here? It's around 26, 63.26. You'll see why this is important. So 74 is up here, and the high volume for here, that says that's the retail price. But if we're below it, it might be too high. The retail price down here was 63.03 quarter. Maybe it's too low. And then for this whole thing, all this volume, 63.35 is now where the highest volume is. So what is it telling us? Let's look at some language. Previously, the highest volume was down at 63.03. That's why we got long on this day for this. Who knew? And then the volume is shifted higher. Now, the way to think about this, and I can't spend much time on this, is that the market is liking this area. We like it. Anybody remember the cereal? I think it was called Maypo. Mikey likes it. Long time ago. So this is the retail price from this day. This is the retail price from this day. Too high. Down here, too low. In between. Where's the fuel? Above yesterday's high, below yesterday's low. What might happen? Depending on how this thing plays out, we might come up to 74. We might stay inside, and I have no clue. It's not my job. So what does it tell us? Now let's come to the next place. If 35 is the highest volume, and the auction, which is this is about using a tool called the volume profile as a chassis, is the way I think of it, is that this is the fair price for the whole region from this swing low to swing high. This is where the most volume is, and you can see it there. Well, then the market tends to slosh, go up and down, and that's called balance. So coming in for the day, what are we doing? We opened inside of, now let's go to Bookmap, maybe. Here's the RTH open. This is called value area high. So we're opening inside of value. That's the first thing. And let's find where is hold on. Yesterday's high, so that's inside of range. And here's yesterday's low. ETH low, ETH high, and do you feel lucky, as Dirty Harry says. Now, let's come down a little further. This is that 35, 36-ish, which is the highest volume price. We're opening at the price. So if you're in the Trader Lab, what you would know, not what's going to happen, part of the thrill, is if we open in range, in value, what does it say? Now, this is a grid sheet I created, and I share this and a lot of other things in Trader Lab, as well as the contribution of other participants. It's a community. We open in range and value. What is that? Now, what does it mean? How do you trade this thing? Well, if you open at a fair price, then if the market is not directional, it's going to slosh around this thing. So it's going to be potentially rotational. So coming in, if you're in Trader Lab, you're anticipating two-sided trade. That's called context. Context drives the whole thing. And not only that, context, part of the thrill in a random environment. Remember, random environment is context changes. And in Trader Lab, we have to learn to understand and define change. The way I do it, and I developed this when I built trading systems, was conditional statements. So if this, then that. If not, then what? So if we open here, so if this, then that. Two-sided trade. But if it changes, then what? Then maybe we get directional, or maybe not. So the market's in balance. So what does it mean? Likely we're going to have a low conviction day. Then the question becomes, Are we breaking out of the prior day's value area? Value area high is here. Value area lows below. Opening in balance, in value. What do we think? Two sides until we come out. Okay? Is everybody tracking? Now, some more statistics for this terrific group of developing traders, and we're all developing. Write this down and you have to vet these for yourself. So we're opening higher inside of range and inside of value. So what does that give us? Here's some statistics. And remember, you got to vet everything for yourself. There is over a 98% probability we take out the first hour's high or low, wherever that might be. We don't know at the open. A 98%-ish probability to take out the ETH high or low, wherever it is, somewhere down here. Taking out the previous high or low, 82%. Taking out the ETH high on its own, 76% probability. Getting to the previous value area high, 72% probability. Getting to the previous point of control, which is the highest volume from yesterday's RTH, 68% probability. Taking out the first hour's high, 66% probability. Taking out the previous high of the day, 58% probability. And we can go on, but isn't that enough? Is everybody with me so far? Okay. So let's take a look. RTH open. We're opening right on top of a fair area in an intermediate time frame, in range, in value. So what do we anticipate? Two-sided trade. What do we know about yesterday? What did the market do yesterday? Market went down. Write this down. This is simple. Now, random, simple. What did the market do? The market does what? Repeat. The market goes down to go up. The market goes up to go down. The market goes down to go up. The market goes up to go down. The market goes down to go up. The market goes up to go down, to go down, to go up to go down to go up to go down to go, and it's down here, to go up, and not so much to go down. Gap to go down, to go up, to go down, to go, we'll find out, right? And as you can see right now, to go up. This is how the market rotates. And why does it do that? Because, you're going to go, why? Because here the market is short. What's in the market? Buy stops. Here the market goes up. What's in the market? Sell stops. Here the market goes down. What's in the market? Buy stops. Do you see how it might work? And it doesn't mean it won't go up, or down. And inside of itself, it does the same thing. And that's what creates our rotations. This is an intermediate time frame, but the market's behavior is generic. So as day traders, we're going to think of it like a Russian doll. Vertical integration of time frames. I don't think of time. In this, I think of behavior. So market opens. What do we know about the market? Well, we're opening higher. We're opening in balance, and we can anticipate two-sided trade. And this will drive you nuts because it's called, when you're in balance, you do not want to trade in the middle. Again, up to you, For me, when I open here, it requires my patience because I can very easily chase the market down and then it can rotate around. And that's often, and again, nothing is mechanical, often what we see. And this is called context. Context is the number one driver, in my opinion. What is the condition of the market? If you're in Trader Lab, you would have a specific plan for this condition. And then you'd wait for your bus or your trades. So what do we know? High probability to get here, retail price, settlement. So this is a target. This is the retail price. So if this is too high, we can come down here. If this is too low, we can, just depends the sequence. So up, down. So my first trades, I'm looking for shorts. But I also know because of balance, I don't want to sell it because I want see these sellers. I know this is the opening swing high. So if that's the opening swing high, what do I know? Balance is the potential, and I always have to say maybe because all you got in this business is, well, it might do this, it might do that, and it might not do any of that, right? So there's my sellers. This yellow line is called developing volume point of control. It is where the volume is. It starts at 0 at RTH open. I get my sellers. So psychologically, I'm going, oh, crumb, I should have sold it. Anybody here have that self-talk? That's the lunatic under the hood who only judges you in hindsight. I call that Hyde, Jekyll and Hyde. If you don't know about Dr. Jekyll and Mr. Hyde, the story, read it, because there's in ourselves, there's the conscious mind and there's the lunatic under the hood. I call it Hyde. Jekyll and Hyde. Hyde's the judgmental, the one that has FOMO, the one that does things you don't intend on a conscious level to do. It's primal wiring. In the self-talk in your head, I shoulda. Hey, yeah, I shoulda what? I shoulda sold the high and bought the low, but that doesn't seem to happen. So yeah, I shoulda. But I shoulda nada because I can't. So I shoulda not listened to the lunatic who's in my head all the time. Do you listen to the lunatic? Gee, I got to get on this. Oh, I missed it. I can still get some. Darn, I took a stop. I got to get right back in. That's the lunatic. That's not trading. And you got to learn about yourself to recognize the lunatic. And the way you manage the lunatic is statistical probabilities. Because now you can look at something tangible and dampen the noise in your head. So this is the retail price. The market shifts down. That price now is too high. And you'll see the high volume. I'm showing you fractals. That's high volume from yesterday's RTH. In the intermediate time frame, that's high volume. What's all this high volume? Well, they're fractals. So when I go up or down in quote time frame or fractals, I'm identifying the same behavior. So a rotation that's 4 points or 3 points does the same thing that this is all about, which is in that huge 200 or 300 point range. It's all the same. It's just what? Fractal. Think Russian dolls. So right here, break low, VPOC migration. Now, for me, I have no short in this environment. Here. Now, some traders are going to take this. I did a webinar on this, and here's the thing. This is called VPOC migration. It's an advanced process. It's the last place developing traders should trade. And the reason I say that is because you have to understand the condition of the market to qualify specific trades. So in certain conditions, this would be a short. In other conditions, at least in my opinion, in this one, it is nothing but a tourist attraction. So too high, shorts are in here. The target is here. Let's watch it. What happens here? Opening swing high. Why did we do this? Well, it doesn't have to do it, of course, right? But what do we know? This is the thing about what you know, not what will happen. I know this is in balance because of where I'm opening. If I open here, I'm looking at this. If I take a short here, which would be my first opportunity, I'd have to enter like what, here maybe, as soon as it breaks away. And am I going to get risk neutral? Maybe, maybe not. But what do I know about the shorts in this leg? There's buy stops here. Why would I do that? What else do I know, you ask? Value area high. And what's the condition of the market? The market is short. Value area high, 72% probability. Now, I'm looking for shorts, but I want the shorts to get taken out and to get the longs in so I can sell. Think of it this way. If the market goes down, there's buy stops out here. If the market goes up, Now that these guys are under the bus, then there's going to be sell stops under this low. So I'm looking to fade it as long as I'm in this. So I'm looking to go outside in, out the bottom. That's what I'm trying to do. And underline the term try. So, and this is very hard. What's hard about this is, where's the outside edge? I always say this is my least favorite condition. Oh, I see we're getting our target up above. How nice. We'll talk about that if we have time. So right here, I'm looking, there's my selling icebergs. I now have my stops out. And now this is called mean reversion, underlining the term mean. We kind of joke about it in the Trader Lab. I find for me, I take more stops in this condition. VPOC migration. So what this is saying, let's look at what it said. This is too high. Now this is too low. And it's flipping back and forth. That is showing that there's no consensus yet on value. So it's trying to figure out what is it worth. And everybody's going, I don't know. I don't know. Do you know? I don't know. What I know is I'm in balance. And as long as I'm in this area, I'm going to be selling it. And I'm looking now, what did we do? Shorts in this leg, take them out. Opening swing high. There. Longs in this leg, I'm looking to get short and come back across the range. So I'm taking shorts. Sticking to it. Like it or lump it. Right here, I took a short. I took a stop. Okay. This full session VWAP, I got short over here, and the idea was to come here. So, and you see how this is flipping around. So this is difficult. Value area high. Remember, it's a target. When I see the selling and I see the liquidity, and what's hard about this, you're going here, and what are we trying to accomplish? The longs are in here, which is why I took the short over here. I break down, I hold the VWAP, and here I'm kind of going, should I have sold that? But I'm not at a location. I get my full session VWAP, and I have my value area high, and I have this liquidity. And I don't know anything until the trigger. So I'm looking at this, and I'm going, but I have this and I have this. So this is called a location. There's no precision. So here, I've got sellers here. This is the passive side absorbing here. And I don't know. I come under here. I come up here. This is just, my teeth are chattering. I break below the buyers. That's my short against that node, and my stop is here. There, and then it's come across, and I'm looking to fall out the bottom. Okay, so that was my short. Now you're going to find this exciting. This was my target. So I had the short, I'm scaled, I'm having a good time. I'm already getting the champagne on ice. This has, what was the probability? I know you write these things down. Remember, you got to vet this. 68% probability-ish. There. So what happens? Comes back around. This is VPOC migration. Now let's talk about the language of the market. This is my retail price. I break. I come back and check it. It's too high. I'm not paying that. So where's the last place from yesterday that we had the retail price? It's there. Okay, well, if that's too high and this was too low and I get below it and now that's too high and I break, this now becomes resistance. Shift low, this becomes resistance, and you're going for that to go there. And of course, being that this is random, instead it's see you later, Tom, out. Actually, it was here. So what I did was I looked at this and I said, I got to clear this, and the teeth are chattering, and got taken out. So now I'm going, so-and-so's, right? And now I'm back looking for shorts again because I have this probability. 67%-ish or 8, right? So now I know this might be too low. So what I'm doing now is I'm tracking this auction. And remember, I'm in balance. So unless something changes, I'm trading, either side. I just kind of like the short side. I don't know. But it could be either side. You could be trading either side. Doesn't matter. 30. Doesn't matter. You just follow your plan and whatever happens, happens, and you wear a helmet. So if I'm in two-sided trade, now I know there's buy stops up here. So why am I trading it this way? Just the same way I showed you at the higher time frame. Market goes down to go up to go down, goes down to go up. And in balance, this is what you're going to get. So as long as I'm inside of the value area, I'm looking to fade it to come back across. That's what I know. I test the value area here, and right here, the teeth are chattering again, and I take another short, and I'm trying to come back here and come out the bottom. That's what I'm doing, sticking to it. I get scaled. I get VPOC migration. Notice what this thing is doing. It's telling me there's no consensus. That's why it's reversion trading, outside in. Scale here. Next target, again, is the same target here. And why might I get there? My longs are now in here, in this leg, and I'm trading legs. Buy stops are there, right? Get the shorts. What happens to them? Under the bus. Thanks for playing. Get the coupon to the buffet. What happens out here? Absorption. See the selling icebergs, and now going for these guys, going for this. And I was just taking the shorts, And look what happens here. This was my scale, and I'm going for this. What happens? Squeezeteria. So look what's going on here. Sellers squeezed. Buyers flushed. Held the low, and this was my price. Too low. Nobody knows. Trying to go there. What happens to these shorts? Under the bus. Pain, oh, pain. So I'm sitting here and I'm, getting as annoyed as anybody else. So let me show you. Now, we're up above the value area. Now, when I get up above the value area, I am in conflict because now I'm beginning to break out of what's considered a fair price. And now I have this level and I'm thinking to myself, well, maybe maybe the shorts that are in here from yesterday are going to get squeezed. Because remember, in the higher time frame, what does this thing do? Which is always, what is it going to do? We don't know. Market goes up to go down, goes down to go up, goes up to go down. And then depending on the behavior in here, can go down to go up, or can go up to go down, or can stay in here, But because of this balance, this is what's suggesting the rotations. This is my target that I've been missing now a couple times down there. And so the idea of this is to test either this or 74, or both, or neither, right? So our target up here is 74.5. Our target down here is 26, I think it is. So you see how it's laid out in the auction? So there's the 26, and the target above, wherever it is there, which is currently the high of the day. This is the auction. Now, the joy of trading is the randomness. Remember I said, we can figure this out, but we don't know is randomness. And what we're trying to do in Trader Lab is define the condition of the market and only take trades that are in alignment. And then whatever happens, happens, and that's part of the thrill. So we come out above the value area high. This puts my mean reversion plan in question right here. So I'm thinking, I guess I got to think about getting short. That's what's run through my head. And what I know is that wherever my last swing high is, wherever that is, So I'm taking I'm abusing everybody. So I have buy stops here. I have my liquidity sitting here, and I come up, I take the stops, 231 buy stops, selling icebergs. I break low. This sets a trigger. So, and this was really difficult for me because I could have been thinking longs also. So this was very conflicted for me. I took a short. And took a stop. Actually, I got a scale, then took a stop. Because I'm trading what's called reversion, which is outside in, and that's the mean. So I took a short to there, looking to come again back here. And I also know things are very funky because I'm outside of value. And I got taken out on my runner. And then I'm really going, I got to get long now. So now I'm looking to get long. And this is the thrill of thrills. So here I have at 9 a.m., we have something called the IB30. The IB30, whichever side we take out, the first half hour, high or low, whatever it is, there's a high probability we will take out, and I think it's in the 70 percentile, that will take out the first hour's high. So now I'm going, okay, I got to be thinking about getting long. Where do I get long? Great question. So I'm looking here, and I have my value area high here. I have this up here, and this is called a low volume node. So I'm coming back over here, and I'm looking where my buyer's buy sweep is, my liquidity was, and I held it. So typically what we get, or often, I don't want to say typically, often when you see a buy sweep, you get a counter rotation. If I don't get it, then this is important. So I'm going to reference this for potential long. I'm outside of value. I'm away from this thing, and it looks like we're not going there at the time. Take a long here. And as they say, hasta la vista, thanks for playing. And notice where we go, down here. So I took a stop. I did not get on the short, which was what I was trying to do all morning. It's just the way it is, you know. So I said, okay, now I'm back in value. Where's my next location? Now, this is not easy trading. It's my least favorite condition. But what do I know? I have a high probability of getting here, and now I have another short leg. And now I'm thinking, okay, we're going to come out the bottom, but I have to get under this to come out the bottom because it was my target. Now, if this turns out to be too low, which I don't know right at the time, and don't forget, my last trade was a long, and I got thrown under the steamroller. You know, it's the way it is. I'm looking at this as my location, and then I'm looking out here. So I have this settlement. There's more. Yesterday's low, ETH low. But I also know the market is short, and I have this as my target down below, and maybe lower, and then I have what's up above. And remember, what was the situation yesterday? The market is short, and I'm in two-sided right now. So I've got, in the current developing context, rotational trading, two-sided abuse. In the intermediate time frame, the market is short, which means there's fuel and buy stops above me, and potentially to get the target we didn't get to yesterday, part of the joy. So right here, I get I see a sweep, and I'm thinking, well, okay, lower support. Let's 336 stops come out. Change in behavior right here. So right here, I'm looking at this, and I'm going, is this a long? Let me show it to you. Now, when this is happening, I don't know what's going to happen. So don't think I know anything. Anybody who tells you this is what will happen, they're just full of baloney. Because all we have in this is, well, this is what might happen. Here's where it might happen. And we put a trade on, and, you know, you follow, you do your thing. And either it works or you take a stop with the rest of us, you know? But I want to show you something called a fractal. Now, we are trading in these multiple time frames. In the higher time frame, or intermediate time frame, this 35 is the highest volume, so we're sloshing around it. From yesterday's RTH, this 26 is the highest volume, so I'm going down in time frame. From this day up here, this is the highest volume. So we got 74 and 26. And in between, we have this, which means, and it could come out either side. Okay, at this point, no clue. All right, I just want to bring you back to what creates this. And then it's still like, what's happening? What is happening? Well, let's look at what's happening. My sellers are here. There's the icebergs. My buyers are here. There's the icebergs. 315 sell stops, so sell stops are coming out. Buy stops are here above. So I got sellers and buyers. And as far as I know, going to zero. Break high. Now there's a trigger. It's a change in behavior. Again, the teeth start chattering. What do I know? This might be too low. This is a trigger. So now the teeth are really chattering. And what happened in here? What is this? Let's look at this. You see that little node sitting out, and you see this? This is an auction. And now I'm going down in time frame, as you think of it, or fractal. This is an auction. Too high, too low. What is happening over here? This is an auction. Apparently, not at the time, but at the moment, it might be too low. What is this? Higher time frame. A fair price, and we can slosh on either side. What's at the high of the day currently? A price that was too high. If this price becomes too low, and we auction it, and we go, nah, too low, you can't buy S&Ps here, then where might it go if I come across the range? Back where it was too high, which is the current high of the day. So let's look. Now I'm going to take you into something, a fractal. And all a fractal is the same thing you're seeing in all time frames. What's too high, what's too low? Inside of this, there's this micro high volume structure. It acts the same as that, except instead of this being from yesterday's RTH, it's what's happening right here. It's all the same. Yesterday's RTH had a high and a low. In this little structure, we have a high and a low. Same. And inside this structure, we have the highest volume. That's like, think of this like your store down the street, your local little mart. And there's S&Ps being sold in here. This price is too high, this price is too low, and this is where the volume is. If I break away from the volume, which is the same thing that's happening here, and I break away from the volume, then this becomes too low. And if I break away from the volume and I test it and I don't take it out, then this is too low. And I have a buy trigger. You see it? This sets up a long. Now, where are we trying to go? You do remember the statistic. If we take out the first half hour's high, there's approximately a 70-ish% probability to take out the first hour's high. What's the other statistic? Taking out the initial balance high, which is this, first hour's high, on its own has a 66%-ish probability. You got to bet that for yourself. So what does that do for me? If I get long here, what do I know? Too low? Maybe, because there's the absorption. This is too low. Next fractal higher, too low. And what about this? 7% probability. Put my helmet on. Then what do I know? 98% probability to take out either the ETH high or low. That's what I know. What else do I know? Yesterday's high. What do I know about yesterday's high? What do I know about yesterday's high? 82% probability to take out either yesterday's high or low. Let me ask you this question from this astute group. If I find too low over here based on the volume, what do you think? We taking this out? Well, maybe. Or if the locomotive goes north, where are we going with an 82% probability? Yesterday's high. What would you do? 98% probability. ETH high. What would you do? Would you scale at the first hour's high? Liquidity comes in the book. Buy stops are over this swing. What would you do? Would you then go, okay, I'm on a directional market. I got a 98% probability to take out ETH high or low. I think I'll go for that. Wouldn't you? Then what? Well, 82% probability-ish to take out either yesterday's high or low. Looks like we're not going for yesterday's low. Looks like that's too low. Looks like we're taking this out. Looks like we're going to potentially take that out. And there's the price that was too high, target, and the trade is over. And then you have choices. You can fade that one up there and come back and revert to balance, or you're done and you're in your Barca lounger. Hope that helps. Let's look. This is your target. The trade's done. The long would be finished. It doesn't mean it's going to go higher. It doesn't mean it's going to go lower. It means you're in your Barca lounger. Is everybody tracking? Now I can look at your questions. How are we doing in YouTube? Please give a like. Hope you're getting something out of this. This is the Trader Lab. You're all invited to Trader Lab. Let's watch this behavior now. These are not trade recommendations. We have selling here. We have microstructure here. And the possibility is to come here or not. Let's see what it does. These are not trade recommendations. I'm not saying I would take this trade. I'm just narrating it. I'm very happy. And I mean happy, like not euphoric, but content, I think is the word, to just trade to my targets with probabilities. Trying to fade and pick the high of anything, not so much. So that's not my thing. But let's narrate it. What do we have here? Let's look at the behavior. We have a buy sweep. We have micro high volume structure. You can see it. It's right there. Just going to show you some ideas. These are not shorts. They are structure. This is called trading structured trades. Let's look at it. The thing about the Trader Lab is every trader kind of finds their groove, what speaks to them. For me, I trade in fractals as I think of them. You think of them as time frames. They're really not different. The only thing is this behavior is not regulated by the clock. So I just say it's a fractal because this could be 5 seconds. And if I have certain behavior and I see the participant behavior, I can then use that, to act. This sets up a microstructure short. It's not a short. I'm just telling you, it's a structural behavior that you can vet. Should you be shorting this? No comment on my part. What's the context? Up. That's why once you achieve your targets, you could be done. This is not about picking highs and lows. It's about reading the behavior. What do we know? Here's what we know. We have taken out the first hour's high. We're out of value from yesterday. We're out of balance from yesterday. And what else do we know? Part of the thrill is this is the highest volume in the intermediate time frame. The market can come back there. Or if I push through here, I can go up here. So if I don't get through here, and it doesn't mean this is the high of anything, I can come all the way back. But I'm just saying. But there is no short here unless you're a short-term trade. By short-term, I mean you get the scalpel out, but the trend is up. So this is where something called time frame comes in. So I can read this and see a counter rotation. But the thing is, if the trend is up, and this sets up a long rotation, let's look at this. Buy sweep, down rotation. Buy sweep, down rotation. Sell sweep, up rotation. Resistance. What is the trend? Up. Do you take shorts? Me? Not so much. Do I narrate this? Yes. Because I can't pick the high of the day. It's not my thing. Just isn't what I do. I can't. So since I can't do it, I don't do it. What I do is I'm always looking at the behavior. But if I know the trend is up, am I going to sell it? I'm not. I'm going to let somebody else sell it. They deserve it. You know, whatever they get from doing that. I'm not good at it. I don't do it. I narrate it. Here's what I know. Rotation, absorption, rotation. This is a sweep. This is too high. Sellers, absorption, counter rotation. Now this is my potential micro resistance. What I'm showing you here is not a short. I'm showing you market mechanics. What am I showing you right here where that high volume is? I'm showing you the same thing I showed you at the low of the day. Let me show it to you. Let's come back. Seems like a long time ago, doesn't it? Let's come back. Let's look at the, what I want you to see is how you can narrate and navigate the market. Let's look at similarities, okay? So, again, location, location. Location, location. This is like real estate. This is the high volume, okay? There's the trigger. There's the test. You would enter here with a stop under here. If it got here, it would be even nicer, but that's life in the fast lane. This is a structured trade. If I get under here, going to there. If you don't get under there, going up to the other one, maybe. Now let's come back to the short trigger, which is not a short, unless, of course, it's in your trade plan and you vetted it. Let's come back and look at the short. Now, let's see what it's doing. You notice where the long was from the bottom. What is this? Isn't this the opposite behavior? And isn't this a sell trigger? Maybe. Again, not a trade recommendation. This is the auction. Too high. Now, doesn't mean anything. It might just, come back here. Support is there. Microstructure. Let's watch right here. Why is this important? Sellers were here. Buyers were here. You get the rotation. You get the sweep. And now this is resistance. What's that old saying? Resistance becomes support, right? Where is it? It is maybe there. So if I sell this, I got to get through this, which is, what are these? Too high, too low, retail. I'm not paying that. Okay. Where's the last location? Too high, too low, retail. Too low. So if I get my buyers, what's too high? There and there. Let's see what it does. And I can't tell you what it'll do. It's not my job. It can do anything, right? Let's try to observe it and see the behavior. Are you guys tracking? Hope you're getting something from this. And apologies for not being able to look at your questions. I'm trying to show you market mechanics. If you have questions and you want to get a sense of what's going on here, and you think this might give you an edge over other traders who are kind of indicator driven without understanding market mechanics, this is not, indicators are really lovely, right? Let's get a bunch of indicators together and throw a lot of spaghetti against the wall and everything works randomly. Very nice. But in the meantime, we're using random inputs in a random environment. Gaming is built on anchored inputs in a random environment. That's the difference. So casinos play the games the same way, and win or lose, they do pay the gamblers. It's overhead and cost of production, but they only play games with an edge the same way. So what is the edge here? The edge is this might give you a counter rotation. Okay. What is the other side? This is where the buyers were. So, and this is where the sellers were, and they got taken out here. So where might the support be? Maybe it's here. Then maybe this outside edge is resistance, and I'm not saying it is, in this. And this might be done for the day because we got this. Now we can keep going. Has nothing to do with anything. Let's watch the behavior. Now let me see your questions. Lucas is asking me, What do I think about the ETH? ETH is important because it's the last auction. As far as the ETH value area, I take a look at it. The most important thing for me, ETH, is ETH high and low and the ETH volume point of control. Where's the fair price in the last auction? This is the same thing. This is the fair price in this auction, and it's too high. So then the last fair price, or unfair price, I should say, was this. So this is my area. I've got liquidity here, so you want to see the interaction. And this can still come out in here, get the stops under here. The way I like to think of this stuff is, why didn't this go down with these red bubbles? That's delta. What happened there? I also saw the question about order flow. What's the advantage of this? If I have a seller and the market doesn't go down, why did it not go down? Because there was a buyer absorbing the market orders. When you see stops, this is a stop and iceberg detector. Why doesn't the market go down? Those are market orders. Those are aggressors. Aggressors show up as delta. Well, if the aggressors are longs getting thrown under the bus, and you'll notice the liquidity pressed, and then the buyers, the icebergs, are here, market goes up. I come down here, market goes up. So the buyers are here. And where was my price? Where my buyers were? Well, there and here. So I know there might be, these buyers might show up again. So this is my microstructure where my buyers might show up. Where did my sellers show up? Well, over here. So this can act as support, and I can come here. That's all I know about it. And maybe here. Or here, give you the other part of the thrill, fall out and, do the Acapulco cliff dive. And the thing about it is we got our targets, so it could do anything. So, but in a fractal microstructure, this is your structure. This is an outside edge for longs, and this is resistance. So I wouldn't trade this thing. I'm just trying to do here is show you market mechanics. So if my plan says I have an edge buying this area when I have a trigger, and we're kind of on the edge of the universe here. There's no trigger here. I'm at a location. Now I got to look for a trigger. Let's see if we get one. If I don't get one, you got nothing to do. You hang out and you work on your crochet. So this is the area. Outside edge is over here. Next support would be down here. Let's see what it does. Are you guys tracking? Any questions? Hope it's making some sense. Probably driving you crazy. Oh, this is an important event happening right here. This is called developing volume point of control is going to shift. What is that volume point of control? That all about. It was the highest volume or the last highest retail price last time we were up here. If it shifts up here and we're above the initial balance, it suggests potential to go higher. Remember, this is the area for potential long. Why? Location, location. Think real estate. Why? Liquidity. This is all about order flow. Why? Sell stops. Thanks for playing. Buy icebergs. And why might we be thinking about this? To observe. Where were my buyers? They were there. Now, it doesn't mean the market won't fall on its butt. This is trading. But what do I know? I know I can maybe get back here. That's what I know. I also know, like everybody else, I can get thrown under the, the steamroller. What do I know here? Buyers were here. Buyers are there. Buyers absorbed here. What else do I know? Stops are here. And if I come outside, here's the thought process. If the buyers like this, so buyers are there, micro volume, micro, super, subatomic volume, too high, too low, break high, trigger, microstructure, outside edge is there. Buyers are here. You can see them. I come down. What do I do here? Sell stops are here. Sell stops are here. Where were my buyers? Here. Where's my outside edge and my liquidity? Here. Is this a potential trigger? Maybe. If it does, where might we go? Here. That's what I know. It's not a trade recommendation. It's only maybe. Maybe it'll go here. Now, we're watching for another event that might happen here. It's called VPOC migration. That is a significant event. If it happens, it'll happen up in here. So let's see what we do. Again, these are not trades because the challenge here is we hit our primary target. So now if we're going to be working in this, we're going to be trading in fractals inside of itself. So we'll see right here. So this is like where the buyers were, right? And the buyers are there. So what I know is the possibility exists that the buyers who liked, this is the area. So if I get my buyers, and retail traders put their stops like here because they're risk adverse, I want to be not putting my stops with everybody. What I want to be thinking about is the icebergs or the passive side. If sell stops come out, these buyers may come in and scoop them up because they think it's a good price. Doesn't mean it won't go lower. I mean, I don't know what it'll do. This is now the new retail price. This is the volume, developing volume point of control. It's the same as that, except currently in our developing auction, this is the new price. So now the market can do the following. It could come above here, go up, or come back outside and then revert back to it. In this current configuration, all I have is longs. So it's either outside in, mean reversion, or you got your helmet on and you're taking longs here against this and this. This has to cross over this, and then we're looking to come in this area. Let's see what it does. It has to cross this, or we can rotate. That's what I know. And I don't know what it will do. I know what it might do. And it's got to clear this, and then we're looking at, up in here. Okay, let's see what it does. And these are not trade recommendations. Hope your guys are getting something out of this. How are we doing in YouTube? Please give a like. I hope you're getting something out of this. Remember, you're all invited to the Trader Lab. There's no cost for Trader Lab. There is a requirement, though, because it's not like some of these silly chat rooms that some of you may have visited. It's a professional community. It is not romper room. So not everybody is in this business, to build a business. They're in this for a video game or gambling, that's all fine. But that's not what's going on in Trader Lab. It's really a different environment. So, it's all a matter of what your priority is. Not everybody who comes in this business is cut out for it, and everyone who comes into business is stimulated by emotional, stimulus, fight and flight, and all the crazy stuff. We all are. Just part of it. And the thing that'll be most challenging for everybody, I believe, is learning about yourself. Because if you can't manage yourself, you will not be in this business. So how do we manage ourselves? Good question. It's statistics. Tangibility versus emotionability. There's a new word, emotionability. J.J. Marks, tell me about that term. So there's either emotional inputs, FOMO, all that, or statistical inputs. When you have a statistical input, you can better manage the lunatic, the fight and flight, and it's just primal wiring. So this needs to do is if we're going up, then this is our resistance. If we fall out of here, then we're going to take more stops out for the longs in this leg. So we'll see what it does. This is the current retail price. There's two modes of operation in this. It's either this north or this not so much, come outside and then long back inside, called mean reversion. So there's two conditions. Outside in reversion, which is what we were doing this morning, just a different fractal, or north. And you know where the resistance is, right? Where is that resistance? Well, first of all, support is here, right? Where were the buyers? They were here. What happened? Why did the market go up from here? Why? What about this liquidity? Is this something that an order flow tool can help you with? If you know this is here, you know the buyers were here, you know retail traders put their stops under the swings. That's not what you would do if you're in Trader Lab. If you did the work, you would understand market mechanics. Retail traders are risk adverse. How does that work out? We all know they're risk adverse. We are risk adverse. Is that our job to do what they do? No. Write this down. Think like a retail trader. Don't act like one. Anticipate to participate. What do we anticipate? Sell stops. Where were the buyers? Here and here. Where might you put your stops? Under here. Or if you get long here against this absorption, you see the icebergs, you get a trigger. There's your absorption, there's your absorption, there's your buyers. This is all triggers. These are all longs. And where's your resistance? Right? Is this making some sense? So this is the long. So what did it tell us? This says counter rotation, potential short, not a short. Context is up. What do you want to do? Use the counter rotation to get long. Where was it? Where was resistance that became support? It was right there. Where do we go? Right there. Hope that making a little bit of sense. Are you guys getting something from this? Let me know if it's just making some sense. Now, guys, it is random, so we got to get over that. Who knows? But if you know you don't know, then you're not trying to solve for what you know or even what you don't know. You're trying to look at this as a behavioral process and a discovery, price discovery. What's too high? What's too low? And if the context is up and we have statistics in the Trader Lab on when you get this condition called VPOC migration, then we have probabilities of the mark of behavior. Remember where resistance is. It's this. Is everybody with me? Yeah, JJ, it's okay. How can you get the areas of interest on your book map? Damien, are you in the Trader Lab? Quants, what edge does Bookmap give? Well, follow the streams here. It gives tremendous insight, in my opinion. Order flow is really the behavior of the participants. Seeing the icebergs, seeing the resting liquidity, does that help me if I know where my buyers might? Now, remember, with liquidity, it's like stepping on a banana peel. You don't know if they're going to pull or trade. But let's look at what we know. What do we know? This is too low. This is too low. What do we know? We're outside the first hour's high. We're over the ETH high. We took out yesterday's high and we got our primary target. That's what I know. If I get long, what do I know? Now let's come down in Fractal. This is all based on order flow. This is order flow based. I don't have an indicator telling me anything. What I do have is the market participants telling me in a microstructure that is too high. If I get along here, where am I trying to go? Either here or there to get risk neutral. Then I put my helmet on and either I'm going to go up or I'm going to fall back underneath. That's it. That's as deep as it gets, and I don't know anything more than that, except if I can get above here, I can come here. Where's that come from? You're asking. How do you come up with these levels, Tom? Well, the market is the one that comes up with the levels. So right now, 74.5. So is yesterday's high, that's this, and 74.5. That's our target. I'm sticking with it. If I get above here, I got 91.5. Now, do I think I'm going there? Here's the answer. I have no clue. It's not my job. What do I know about down here? This was the retail price from yesterday. 26. Too low? Too high? Question mark. If it's not too high, then I'm going to push outside to here and then maybe come back or nothing, or we're done. And that part, clueless. So where am I? What happened? Let's look at the range. Where's the low of the day? It's there. This is the auction. Where's currently the high of the day? It's there. The auction. What is the current developing auction? This is the retail price. What might it be saying? Too low. And we don't know yet about this. Is this too high? Or if I get over this, let's think of this from the other side. If I come back here and it's too low, I can go up. If I come across here, this can be too high and I can come down. If I get above this and this one in a developing, now I'm in fractals, right, is now the new price. Everything below might be too low and I can push through to here and at some point maybe even come there. Don't know, not my job. Okay, this is the auction. This is the Trader Lab. You can learn this. And when I mean learn it, I'm not saying you show up for 30 days and now you have plug and play. Let's get real. You've been doing that. You already know the truth. The truth is everything works randomly. And if you don't have an edge, you're still going to lose. Doesn't matter. Everything works. If you look at your software toolbox and you have that smorgasbord, I mean, think about it. If you throw everything on your plate, everything works randomly, but does it have a statistical edge? This is where the problem is for us. We throw indicators, and our nature is looking for certainty. We're going to throw more indicators. I'm going to put 4 or 5 on. Oh, this one works pretty good. Let me put that on. Oh, I'm going to put an anchored in VWAP at this swing high. That's a wonderful thing. Well, really? Is it? I don't know. Maybe. Do I put a VWAP here? So it's going, what do I do with that? Do I put a VWAP here? Well, there's my resistance. Where is it? It's there. Isn't this interesting to you? Is this interesting to you? Is that interesting to you? Is that interesting to you? Is this interesting to you to come back there or there or there? Is that interesting to you? Do you understand why? Not will it, why might it? The best you have in trading is maybe this is too low, maybe this is too high, maybe we'll come from here and we'll come back and check that. If it's still too high, maybe we're going to take these guys out and we're going to come outside. If we come outside, then what? Then maybe we'll get long to come back here and come back here. Or maybe we won't take this out. Maybe the buyers in here have their stops here and they're going to be on the chopping block. Or maybe when we come back here, we're going to hold it and then we're going to push off again. Or maybe we rotate and slam everybody else. Isn't that what you got in this? Maybe. And isn't that the best you have? Maybe. If I understand market mechanics, if I took along here, maybe I would get my scale there or there because this was too high. And I won't know, right? But what do I know? I know I can take along here, and I know I can get risk neutral. When I say I know I can, I know I might. And then I either go on, or remember, if this is still too high, hasta la vista, counter rotation. All of this is before the fact. It's not predictive. It's just one of the things that might happen. It can do this, it can do that. And remember I talk about building trading systems. I managed a large book of funds back in my youth, if you will, substantial 7 figures. And I had to build systems because I was managing across multiple asset classes. And there's no day trading. This is swing trading, trend following, okay? So swing trading was short-term trading back then. 3-day swings, 2-day, 3-day, and the big S&Ps. So the point was that the market rotated, and I found that when I was writing the systems, I built conditional statements. If this, then that. If not, then what? If this is too low, and this is the new price, if this, then that. If this then is too high, then what? Then down there. But if not too high, then what? Then out the top. So that's why I can go if this, then that. If not, in other words, it is too high, then what? Then south. Then what happens next? Now the longs in here, and these guys, thanks for playing, they get a coupon to the buffet. I can pull outside, and what's my next structure? Mean reversion, heavy on the mean. What is mean reversion? Rotational trading, different context. Now I'm in outside in, back to here, or not, or fall out the bottom. Neither here nor there. But what I'm suggesting to you is you can learn how to narrate the market, and this is a foreign language. So I don't use any indicators because I found too much noise, too much conflict. I was looking for the indicators to do the thinking, plug and play. Well, trading doesn't work that way, or else, at least my opinion and my experience, no, that's not the way this works. If it's plug and play, every retail trader out there is throwing everything, but the kitchen sink on there, looking for certainty, and everything works randomly, which is, to me, the problem, not the solution. Everything works randomly. The difference between what I'm doing here and indicators, which both work randomly, is I have an edge. Indicators, multiple indicators in a random environment might be a guaranteed loss, even though you're going to have winners along the way. And our nature is to think, well, I'm doing the right thing. I just got to make it better. Well, do that for a number of years. How's that working out for you? Didn't work out for me. And I thought it was just persistence and make it better. I mean, it's so logical. Look, this works. Maybe I can make it better. Well, maybe if I put another indicator over this and get confirmation. Is that your vocabulary? That is a neon sign going on and off. Curve fit, curve fit, curve fit. Doesn't work. Why? Is this condition the same as this condition? Your indicator cannot differentiate something called context. That was the problem. Because they're all right. It's like a clock is right twice a day. Well, indicators are right too, because everything works randomly. And we mistake randomness that we just have to make it better to create certainty. And most of us do more indicators for more certainty. Well, more indicators creates more randomness. And, I did a primer webinar, I guess it's about 4 or 5 years ago. It's got about 34,000 views. And it's really about the business. It's a primer webinar. It's about the business of trading. What is this thing? What makes it so complex, so difficult? The randomness is what makes it difficult. Let me see if I can show you something. I'm going to show you the Trader Lab community. Just a quick peek. This is what's going on in Trader Lab. Community of traders that have come together to leverage their experience. A lot going on in here. Charts being posted, trades being discussed, and like everything else, mutual support. I took this trade. What do you think? Why did that happen? What's the context? Well, someone's getting long, somebody else is getting short. There's no right or wrong in this business. What are we looking for? Outside in, mean reversion, right? Hard part about reversion trading, which is what this is where's the outside? And that's what I was doing this morning, trading reversion. It's hard. It's a harder condition for me. And I think certain conditions, you just become good at certain things, and some things you don't have the same kind of edge. Doesn't mean you don't trade. It just means you understand where you are. And if you don't have a statistical edge with something, you don't trade it. You wait for your bus. If you have to get every wiggle in rotation, that's FOMO. That's not the business. And by the way, thanks, Ned, for doing this. This is our library of webinars. Start here. Primer webinar. Meet the Trader Lab. What is this Meet the Trader Lab? This is an advanced trading methodology. And I always have to say, when we hear the term advanced, we think complex. It's the opposite. We tend to think the answer's buried in complexity. The answer's buried in simplicity. What's the difficult thing for us is the randomness. So you use your indicators. You are using random inputs in a random environment. Trader Lab is about anchored inputs in a random environment. What's the difference? Same way the casinos operate. Anchored inputs in a random environment, not random inputs in a random environment. Do you think there's a difference? Now, stop gambling and start winning. Check that out. Because most of us think of trading is just taking a shot. I'm taking a shot. No, you're not taking a shot. Well, you can, but that's gambling. I don't take a shot. I take a random outcome of something that has an edge. I operate like a casino, and I look at it like I only interact where I have an edge. If I understand, and I understand just like everybody else, if I take this long, I got a scale here. This microstructure, this high volume, is the same, now this will get you nutty, as getting long here to there. This high volume is a fractal. It's the highest volume for the day. If I come outside, I can come back here. If I come out to the high volume here, I can come back to the shorter fractal or shorter time frame. It's all the same. Here to there is the same as there to there. It's just different locations, same behavior. Think Russian dolls, vertical integration of time frames, or Matryoshka dolls. There's no clock here. I am not using time. The market could care less about the clock. The market is a function of interaction between buyers and sellers. That's what creates either acceptance or rejection. If I come outside somewhere and I get my buyers and I get my icebergs and my sell stops coming out, who knows? Now I'm just showing you behavior. And I break high, I'm in micro, and my sellers were there. That's a micro volume point of control, or a high volume node. It's support. Where's my resistance in the next fractal? Now these are not trades you should take. I'm just showing you mechanics, market mechanics. That's retail. If I get above here, I'm looking at this. If I can't get above here, then I'm looking at south. That's all I need to know. What else do I need to know? Anybody need to know anything more? Well, let me ask you the question. Can you know anything more? Now, the thing you need to know is this your trade? And if it is, even if you got long here, and I'm not saying anybody should be trading this, what did I say before it happened? I said here to there, and I'm not predicting. I'm understanding is a big difference. I understand. I don't know. So I know where I will trade. I know the behavior of the market. I know I can take a stop. And I know if I get risk neutral, I have an opportunity to go, if I get above here, to go to a target that pays me. Or I never get above this and I do the Acapulco cliff dive and I'm coming down here. If I take a long here, my microstructure long would be there. Now it has to have range to qualify and my target is there. If I get over here, I'm looking at this and this. That's it. Doesn't have to do anything. And what qualifies the trade would be the distance. Remember, where are the sellers? There, right there. Let me draw a little box around it so you can see it. Let me try to draw a box around it. By the way, while I'm doing this, I'm actually jumping between 3 computers because most of you guys don't have any idea what it's like over here. It's like a lunatic. It's like, where's Igor? I feel like a mad scientist sometimes. What I'm sharing with you here is something that I've spent, I've been doing this 46 years, and I have shared 60 PDFs. See this? This is where the sellers were. This is the absorption and the buyers. There's the iceberg. No clue. How do I know it's not going to zero? I don't know. What changes? The buyers. Where's my support? It's right there. Where's my resistance? It's right there. See it? So you understand, if you took a trade here, you have to have range, so it has to qualify. I'm showing you mechanics. I'm not showing you trades. I'm showing you. See, here's the thing. The auction is going to do its thing. It doesn't care about me or you. We need range to get risk neutral so we can have the opportunity to go on or scratch. If my entry, which would be here to here, does not cover my distance from entry to failure, which is here, then the trade does not qualify. subject to your plan. I'm just talking about me. I'm not saying my plan is good. I'm just saying it tends to work for me. And it psychologically, it fits my, the way my brain operates. I'm risk adverse. So I try to get, if I can't get risk neutral with a little room to spare, I'd say, well, that next trade, it's like waiting for a bus. Where did my sellers take over? Here. What do I have to get over? This little microstructure, but this. So if it falls out the bottom, then that would be it. And that's okay. The long would be here to here. But let's remove the range and talk about the concept. That's what's important. The auction is conceptual. It's how the market works. We require the range for what's called risk reward and probabilities of getting risk neutral. So I'm just saying in TraderLab, you would build a trade plan built on a methodology, built on market mechanics and not indicators. I'm not saying you can't use your indicators. What I'm saying is if you're letting your indicator define what you're doing, you are really missing, I believe, the opportunity to learn and to separate yourself from other retail traders doing the exact same thing. And with the failure rate being so high, to me, it makes sense you understand how the market works. It is not your indicator. Because in this condition, would you be taking shorts, or would you see a short and use it as a counter rotation to take a long? You see, the short was there, wasn't it? But it's not a short. It is either a trade management opportunity or an opportunity to get long. There's your resistance. What happened here? See you later. Where's our support? Well, we had that, resistance. We got this, resistance, resistance. That's what you got. So it's only longs so far, but we got to be conscious. If we can't clear this, then it's potentially we're done. Or not. Don't know. See? You know? I don't know. So my job is not to know because I can't. My job is to take my trades that are qualified based on my plan, get risk neutral, hopefully, and then the worst that happens is I take a scratch and my broker sends me a gift basket. Or I get to my next target, which would be up here. Or I'm just managing my trade and the worst that happens is I scratch and I'm sitting back on my Barca lounger and I'm going, well, if I clear here, I got this. If I don't clear here, I'm going to come down. And that's okay. That's just one trade. Please give a like if you're visiting in YouTube. Don't forget there's a contest going on. I just want to remind you guys, in case you missed it at the top of the stream, you can earn 3 months of Global Plus free. All you got to do is take some screenshots of Bookmap. And if you don't have Bookmap, with your trades and setups on them, a couple notes, circle arrow, you can download a free digital version at bookmap.com. If you want to visit the TraderLab, there's a link in the bottom of YouTube. There's no cost for TraderLab, but you do have to verify your Discord username. Make sure you're not a spammer. All you got to do is share your setups on X, Instagram, or LinkedIn, and just use the hashtag #FreeBlueJacket. You can win 3 months of Global Plus and data. You don't have to register. You can stay under a rock. Nobody has to know who you are. So don't worry about it. Okay, but that's available to everyone. Please leave a like. I hope you got something out of the day. If you have questions, visit the TraderLab. The thing about TraderLab, it is open to everyone. There's no cost. Use the link in the bottom of YouTube if you're inclined. This is not a plug and play scenario. This is actually about the business. If you're interested in creating potential sustainability, visit the TraderLab community. There's nothing like it as far as I know anywhere. And you're all welcome. Don't forget to give a like on the way out. Don't forget the contest. You can go to bookmap.com, /BlueJacket if you want more information. I appreciate you guys visiting the lab, and I appreciate all your support. And TraderLab, I will be back in the chat with you momentarily. Thanks again, guys. Thanks for visiting us today. Hope you see that there might be some rhythm to the madness and the randomness. Thanks again.